But we are starting to see some of the effects of higher rates. Auto prices are down about 4% from 2 months ago. Real estate prices are starting to pull back in certain areas as well. So we'll see. Now there's a lot of other things happening in the economy as well, Chris, and you have a whole list of economic numbers. So let's hear what those are.
Yeah, a couple interesting things. The personal savings rate came out. That fell to 3.1% in September from 3.4% in August. But I think the bigger thing to highlight, it's down from 7.9% from a year ago. So that's, I think, a direct correlation to this inflation, right? You have people are trying to keep up with the spending. And then kind of what coincides with that is the U.S. credit card balances are up 9% from January and are up 23% higher than their kind of post-pandemic lows. When people couldn't travel as much, a lot of people paid their credit card balances down. Well, we're seeing that kind of go back. So, both of those things are negative, I guess you could say, or would point more towards that recession, because what that would say is the consumers desperately trying to keep up with their spending. Most people don't like to pull back on their spending until they really have to. So they'll resort to credit cards, maybe pull a little bit from their savings, maybe not save as much as they were to try to, maintain that lifestyle until it really forces them to start to cut back. So we haven't seen that yet. I mean, that's probably something coming down the pipeline. And then, as you alluded to, Brian, on the home prices and in the real estate market, we're really starting to see things fall off. The S&P CoreLogic Case-Shiller National Home Price Index, which is a fancy way of just saying the average price of a home, fell 1.1% in August from July. So that's the second straight month that we've seen home prices really fall on average. And that's the largest month over month. So 1.1% month over month decline since December 2011, which the real estate market in December 2011 was still recovering from, the 08, 09 kind of washout of the market. So this kind of goes back to there. And then sales of previously owned homes, so just sales, not necessarily prices, sales declined 1.5% in September from August, or month over month, to a seasonally adjusted annual rate of 4.71 million. And that's the weakest sale rate, if you will, month over month since May 2020, which was the heart of the pandemic. And that was where nothing was moving. Just a lot of fear going on. How long was this going to last? You had the market, really the economy at a standstill in May of 2020, for those of you that remember. Obviously, after that, we saw the real estate market just explode up as you had a lot of people wanting to move more space to the suburbs. But a lot of movement there. And then the other kind of two things I'll highlight, we talked on here obviously about the U.S. Federal Reserve raising our benchmark rate by 75.75%. But we also had the European Central Bank raise their rate by 0.75. That brought theirs to 1.5%, the kind of policy rate, which is the highest it's been in more than a decade. But for comparison purposes, the U.S. is at a rate of between 3.75 and 4%. So we're still over double. Our rates over double the ECB's rate. And the Bank of England also came in and raised their rate by 0.75 to 3%. And that's the largest rate rise that they've had to put on their market since 1989. So I think that's an important thing to highlight, that even though we talk a lot about the U.S. markets and that's what gets a lot of the news, what's going on in the U.S. markets and these rate hikes and the interest rates that are going up aren't necessarily just isolated and affecting just America. It's also impacting the global economy and the global world. And so what we're seeing is a lot of countries have to raise their rates because their currencies are getting crushed by the strong dollar. I mean, the strong dollar has been a big weight on the global economy. And I think it's important to point out that I don't think it's the fault of the U.S. I mean, we have to do what's in the best interest of our country. But it's going to be really interesting coming out of this. If the dollar being the reserve currency of the world, that policy might be something that gets reviewed. I could see, because letting one country, letting America put a lot of pressure on the global economy, I think some countries are going to have a problem with that. So really interesting things going on around the world outside of America as well.